What is going on, everyone? Welcome back to another video, another day, another dollar with your boy. We'll be breaking down our futures contract per usual, looking at the ES futures contract, and boy, oh boy, was it a really strong day to the upside. Almost went triple distribution to the upside. Double distribution day is what we go out with a small set of single prints, an afternoon pullback low, and yeah, almost printing 5,000. I mean, very impressive day for the buyers, especially after, ooh, that's ugly. Especially after the, pretty grim day that we had on the Fed day on the 31st, only for it to all be taken back. We tried to go trend up yesterday, right? One time frame up into the close near the highs, looking to come out of yesterday was an inside day for this ES. We were looking to come out of an inside day to the upside or the downside. Either way should have provided some pretty good movement one way or the other, and it did. So whenever you have inside days, you look for continuation or lack of. And then not only did we have an inside day scenario that was playing out, we also had an outside week scenario playing for the ES, and then we also had daily breaking out of balance. So a lot of things that short sellers, if there were any bears in the market, they didn't want to see happen today, happened. So we came out of the inside day to the upside with a gap initially, a very, 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 very small gap above the previous day's high. Okay, we came in, filled that gap, and then pushed up pretty good, eventually getting the overnight high. Now the overnight range was pretty large, actually. The overnight range was pretty large. Just a whole lot of run up from the close yesterday. And then the overnight session had a pretty significant high and then dumped pretty good, and then ended up opening up with just a slight gap above the previous day's high, inside of another gap, to say the least. We eventually filled the downside gap, which was a great long opportunity, especially if you were going to use M periods low, or the settlements low as you're out, not M period, excuse me, settlements low as you're out, 25.75. You got long, right around 30, you use 25.75 as you're out, and you didn't sell all day, or maybe you didn't sell until the balance high of 57.25. I mean, you made pretty good money there. 20 points to the upside. ES, really good risk reward trade. I did get involved a little bit on this push up. I had 3 contracts. I had taken profits at the balance high here at 57.25, or actually not 57.25, excuse me. I'll explain my trade here in just a second, but let's just continue to go over there. So after filling the downside gap, we filled the upside gap and then continued to push up higher. I said if we did fill the gap, we would get to that 11Y point of control. Boom, hit the 11Y point of control, no problem. If we got that and we found acceptance above 49.50, we would go trade at the all-time high, 49.57, and boom, we got just that. So very, very good early on, right? We began one time framing up, we took out the initial balance high, and then in C period, we attempted to go trend. Now trend is not necessarily indicative of just having single prints. It can mean various things to people, like one time framing up can be trend to people, but a stronger trend is whenever you do have a set of single prints. And I'm about to highlight where that set of single prints was located. And you guys hear me talk about single prints all the time. That's not perfect, but right there you can see there was only one time frame that traded between 50 and 53. Well, initially it was 58, but we pulled back, and then that's where I decided to get involved in the market, was against the set of single prints because we had higher value. We attempted to gap up. Yes, it did get filled, but we had gotten the all-time high, created a new one. We pulled back, and we had set of single prints. And that, with everything that was going on in the market, I was like, you know what? If there's any short sellers out there, they're getting caught. Meta had a fantastic day to the upside. They were up pretty big. So I wasn't expecting this market to really rip lower, if anything. And then I had my stop just below 44.25. I think I had it at 43. So I was risking a good little bit. I was risking about 10 points on 3 contracts. and I was willing to add if the single prints did fill at 50, but I was long around 54. And then because I was long around 54, I was like, you know what? The average true range of each 30-minute candle or 30-minute bar is usually about 10 points. So I set targets 10 points higher because I didn't know where this market would go after it got above 57.25. So I was like, if we do continue to one time frame up, whether or not we hold single prints, whether or not we hold trend to the upside, should have a 10-point range in each candle or in each bar here. And they all pretty much did have roughly 10 points. I think the only one that didn't was this one at 8.5. But either way, I'd set a target at 64. Actually, I moved it up and got it at 68. And then I had another target set at 74. I took it off. And then I actually took off all of it at 74. But I also had another one sitting up here at 84. I should have definitely left that one in because eventually we did get up to 84 later. I would have moved up my stop at the single print start at 53. Had we gotten there, I would have been stopped out. But because I was already out of the trade and I wasn't looking to get long again, I had made pretty good money on the 3 lot. This buy here at 58.75 against the set of single prints where they started at 53, you're risking 5 points to rotate back up to the day's high of 83, right? From 58 to 83. I mean, you're looking really good, right? And then we attempted to go trend up again, having a set of single prints until they got filled late in the day and end period, when we just kind of had a little bit of a liquidation, profit taking before the weekend, but a very strong close for the buyers to say the least. And knowing how or when to get involved in the market is key if you're going to be successful. When I got long down here, buying against the single prints because of the market generated information that we had, one time framing up overnight. We held the overnight low, We're above the open. We have single prints. Value is higher. We're at all-time highs. All those things into account makes it a confident buy on a pullback, right? And then obviously on this pullback here, excellent buy opportunity around that 58 level, right? Because you had single prints to lean against. You were trend up. It was a double distribution day. And even if you chopped around between 53 and 82, that's a good range to make some dough. So you get long, and guess what? Boom, you pop up, you get out 82. If that's how you feel, you get another opportunity to buy on a pullback. You get long, boom, you pop up, you make some money, right? That's the ebb and flow in the bigger picture. That's why it's key to know these things. And if you guys are wanting to know more, go check out Paul Asmar, camelbacktrading.org. Great mentor, great guide, a couple other good traders in there that will help you learn these types of things. And today it helped me make pretty good points on the ES. So I'll take it. Let's go ahead and mark our destinations. And then we're going to take a look at the larger picture. Now, keep in mind, we did take out last week's low on the weekly time frame. So that puts us in balance technically, but we also have an outside week up because we took out last week's low and then we closed above last week's high. Very, very strong in the sense of buy or the buy pressure in that regard. So whenever you have a scenario like that, what you want to see as a buyer is continuation to the upside by taking out this week's high. If we do that, then we just resume one time framing up to the upside. Alrighty. We're going to mark our high of day up here at 97.75. 97.75 is the high of day. And just shy of missing that 5,000 level. And I said, if we did get above the high of day or the all-time high, there was nothing until around the 5,000 level, just because it's a visual level round number. Market tends to like those round numbers. So that's why that was an ultimate target up there. And yeah, we're just 200 points shy, 260 points shy of hitting my target on the upside for our monthly target. All right, afternoon pullback low. And this is a textbook afternoon pullback low because we have a double distribution and single prints below. So this is a textbook afternoon pullback low. And in this setup, this is one of the most profitable setups in my opinion whenever the market is in a trending market to the upside. This is a very, very profitable trade. Are these afternoon pullback low trades against single prints below you? In the previous or last year, they really weren't as strong to lean against just because of the choppiness in the market. But because this year is more of a bull market and we can rely on market generated information like single prints just a little bit more with the way the market's trading, then, you know, getting size on these trades would not be a bad idea. I think I'm going to, whenever I begin to look for afternoon pullback low scenarios, I will most likely begin to size up on those trades until, you know, I'm told, hey, dumbass, don't do that. Like obviously getting hurt. Oh, didn't mean to do that, but so single prints start at 49.53. They fill here at 50. So on a pullback, that will be a target to fill. That'll be a target to fill. All right, so double distribution day was a triple. That set got filled late in the day. But we have a double distribution. I'm highlighting the distributions, right? So buyers want to open above the afternoon pullback low of 49.58 and open up in this upper distribution come Monday. Okay. Buyers do not want to open below 58.75, which is where our all-time high was previously. So that was pretty much once we broke the all-time high, through that all-time high and our daily balance high, right? Once we broke through that, we kind of pulled back and retested that area. That was a great long opportunity. I just cannot stress how, you know, strong of a buy opportunity that was. And then the lower distribution is going to be down here. Buyers do not want to open up down here. If they do, then the likelihood of coming back into a balance on the daily is good. However, would not be surprised come Monday that we have a little bit of a dried up session and range kind of dwindles and we chop between the two distributions, trying to find acceptance up here before we begin to push above 5,000. However, if we do open above the afternoon pullback low and open up in this upper distribution here, because we are one time framing up on the daily, and this is a weekly high now of 97.75, and buyers want to see that outside week scenario up come to play, outside week up scenario come to play. They need to take out 97.75, get above 5,000. How far we push above, you know, the market can only tell us, but that is what buyers want to see. They do not want to see consolidation. Isn't bad, but participation within that consolidation will be very lackadaisical, and, you know, range will kind of tighten up because of it. Now let's go ahead and look at the larger time frames here. We'll start with the monthly. The monthly continues to one time frame up. We were talking about this in yesterday's video, that we needed to take out last month's high to continue to one time frame up, and the odds for that were pretty good, right? We're still very, very strong in the monthly. We continue to grind higher. Last month's range was roughly 237 points. So far this month, we are 123. So if we continue to push up a whole another 100, right, and have a similar range to last month, we have a similar range, another 100 points to the upside, will roughly put us around that 5,100 point on the upside. But like I said, would not be surprised if we have some issues above 5,000, as it is an all-time high and could lead to some type of consolidation on the weekly and the daily, because we are now back to balance on the weekly but up in the daily. So if we continue to one time frame up in the daily, obviously the weekly will resume one time framing up by taking out the high 97.75. Hopefully that makes sense. So let's look at the weekly real quick. The weekly. we need to update this balance. Let's go ahead and do that. Need to update this balance here. So now our balance high is going to be our all-time high at 49.97.75. 49.97.75. Boom. And our balance low is going to be this week's low of 80, or actually it's 68.25. So 48, 68.25, because the overnight session is that low there. So 48, 68.25 is our balance low. So we're in a 2-week balance. Okay, so we could potentially chop in between this range prior to moving above 5,000. It would not be unhealthy to have consolidation in the weekly prior to getting above 5,000. Okay, just like we had consolidation here prior to finding acceptance above 4,800, and then boom, we push up above 4,800. Now we're trying to, I wouldn't be surprised to find consolidation above 4,900 before we attempt 5,000 and have acceptance of price at 5,000. Does it make does it make sense? Kind of got a stair step, right? Got to build the shelf or the stair to step on, and then move up higher to have that next leg. Hopefully that makes sense. So would not be surprising to see consolidation on the weekly within this time frame, or within this range, excuse me. But if we do take out 97.75, balance rules will be in effect. You will want to take out 97.75 and push up pretty good. Get extension above. If not, then you'll just be looking. So say we push up Monday to 5,000. That will be just stretching the balance high slightly. And then that would be rule number 2, where we kind of stretch the balance and then roll over. So we'll see how next week plays out. Let's go ahead and look at the daily within that range just briefly. So this is what the daily looks like inside of the weekly range, right? So wouldn't be surprised to see the daily chop inside of here. Don't want to see that, as the 20-day moving average is creeping up to that weekly low of 68.25. So you don't want to see a lot of consolidation on the daily from the buyers. However, like I said, it would not be unhealthy, especially if we consolidate in that area or in the range that I was talking about just a minute ago, in the upper distribution between 58, which would be, and 97, which would be the upper portion of the balance. So like I said, you want to see buyers get up here, get above 97.75. And for our daily, we are one time framing up on the daily time frame. If we take out today's low, which, like I said, buyers don't want to see, we don't want to see that, sellers do. If we take it out, then we'll just be back to balance, and then that we'll pretty much just say that the daily balance will be the exact same as the weekly balance, and then we'll just consolidate inside of here until we decide to break out one way or the other. But right now, with the monthly up and the daily up, the market is looking healthy. The market is looking strong. Just need to get the weekly back to up, and we'll be A-okay. So with that being said, ladies and gentlemen, I hope you all had a wonderful day. I'll catch you guys in the next one. Thanks for liking. Thanks for subscribing. Leave a comment down below. Let me know how you're trading. See you.